Is investing in the Canara HSBC Promise for Growth Plus plan the smart investor's dream or another market link gamble? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. This is a linked individual savings life insurance plan. Some of the key features of the policy are you get to enjoy the life cover for the entire duration of your policy, and you get to choose from 3 plan variants, and only fund management and risk charges apply in this policy, helping you to maximize your savings potential. And your mortality charges deducted during the policy term or added back to your fund value at maturity. And this also ensures that your savings goals stay on track even in your absence, and you get to access a wide range of investment options with a choice of 12 different funds. And this is flexible with premium payment options where you can pay throughout the policy term or for a limited period, with the freedom to customize your policy and premium payment terms. And loyalty additions and wealth boosters further enhance your fund value over time. And there are benefits like death benefit, maturity benefit, and loyalty additions. So now let us take a look at the advantages. Milestone withdrawal option offers liquidity at important life events, allowing you to access funds when needed most. Partial withdrawals are permitted from the 6th policy year onwards, provided the life assured is at least 18 years old. The systematic withdrawal option helps you to create an alternate income stream during the policy term. You can opt for the settlement option to receive maturity benefits in periodic installments rather than a lump sum. Premium redirection is allowed at no extra cost, giving you flexibility to change your investment strategy. You get to enjoy unlimited free fund switches, allowing you to adapt your investments based on market conditions. The premium fund benefit exclusive to the Promise for Care option ensures your plan savings continue even in your absence. So you can customize your policy as your financial situation evolves to change premium amounts, policy term, payment tenure, or premium payment frequency. So these are all the advantages you get from investing in this policy. However, the disadvantages are this plan does not offer a loan facility. The funds remain inaccessible during the first 5 policy years. The sum assured may fall short of financial requirements, and the investment returns are lower compared to alternative options available in the market. So these are some of the drawbacks that you need to keep in your mind before deciding to invest in this policy. And if you want to know more about certain aspects of this policy, you can definitely go through the policy brochure. So now, as we have a basic understanding about this policy, let us move on to the analysis part of the video, where we are going to conduct an IRR analysis by calculating the internal rate of return of this policy based on the policy brochure's benefit illustration. So here, for calculation purpose, let us assume that a 21-year-old male has chosen to invest in the Promise for Wealth Plus variant in this policy with a sum assured of 12 lakhs. So here, the policy term and premium payment term are both 15 years, and he commits to paying an annual premium of 1.20 lakhs. Under this option, the fund value is payable at the end of the policy term, assuming all the premiums are paid by the policyholder as scheduled. So here, the policy brochure represents projected returns based on assumed annual investment growth rates of 4% and 8% per annum, just to indicate this policy can perform at worst and best case scenario. So these projections are just for example purpose or not guaranteed. So the actual returns will vary based on the fund performance and market conditions. So at 4% assumed return, which is the worst case scenario, the projected maturity value is 22.54 lakhs, translating to an IRR of just 2.76% as per the policy's maturity calculator, even lower than what most savings account offer. At an 8% assumed return, which is the best case scenario, the projected fund value is 30.80 lakhs, resulting in an IRR of 6.46% as per the policy's maturity calculator, which is on par with or possibly lower than bank fixed deposit rates. Although this plan is positioned as a long-term wealth building tool, the projected returns indicate limited growth potential over a 15-year time horizon. The corpus generated is unlikely to be sufficient for meaningful financial goals. Moreover, the life cover of 12 lakhs is inadequate, especially for someone starting yearly with future responsibilities in mind. So as this policy is not giving us the desirable outcome that we need, let us move on to a comparative analysis where we are going to separately invest in insurance and investment for better financial efficiency, just to see whether investing separately can give us better outcomes compared to investing in a bundled policy like Canara policy, which combines insurance and investment. So here for life cover purpose, we have considered buying a pure term life insurance policy with a sum assured of the same 12 lakhs, which could cost approximately only 3,800 rupees annually for premium for a 15-year term. So compared to the 1.20 lakhs we paid in the Canara policy, here this leaves us with 1,16,200 rupees each year to be invested based on your risk appetite. So if you are a conservative investor, you can allocate 1,16,200 rupees annually to the Public Provident Fund PPF, a low risk government backed debt instrument. Over 15 years, the PPF's corpus will grow to 31.51 lakhs, delivering an IRR of 6.73%, slightly better than the 8% scenario projected in the Promise4Growth Plus plan, despite being a safer investment. For aggressive investors, invest the same amount in an equity mutual fund scheme. Over 15 years, the pre-tax corpus grows to 48.51 lakhs. After adjusting for the capital gains tax, the net maturity amount is 44.78 lakhs, resulting in a post-tax IRR of 10.74%. So if you have any doubts regarding how we have calculated the tax from equity mutual fund, you can refer to the small tabular column we have presented on the screen for your easy reference, which you can pause and see. So here the equity mutual fund offer you higher risk adjusted return and greater liquidity with no restrictions on withdrawals. Unlike the Canara policy, this alternative approach delivers better returns, greater flexibility, and adequate insurance coverage. The ability to customize your investments and access funds freely gives you an edge in meeting your long-term financial goals, something that bundled insurance and investment products often fail to deliver. So what is the final verdict then? Is investing in the Canara HSBC Promise4Growth Plus plan worth it or not? So this policy offers you three variants: one focused on wealth accumulation, another that waives future premiums in case of eventualities, and a third providing life cover up to the age of 100. Based on individual preferences and cash flow capacity, investors can choose a suitable variant and invest in market linked funds. However, a closer examination reveals that the plan does not truly deliver on its promise of growth despite what the name suggests. Beyond the option to choose among the three variants, the plan lacks any distinct feature that sets it apart. Moreover, the high charges and the lack of transparency in fund management significantly drag down performance, leading to suboptimal returns. The low sum assured further reduces the appeal of this plan, making it an inefficient choice for long-term financial planning, and it also has a high agent commission. A smarter strategy is to separate insurance from investment. A pure term life insurance policy offers you adequate protection for your family at a low cost. So investing the remaining funds independently allows you to choose products that better match your financial goals, risk appetite, and investment horizon. So that's why before committing to any financial product, it is essential to conduct a thorough analysis to ensure it fits within your overall plan. Remember, a well-structured financial strategy is key to achieving your life goals with confidence.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.